Over the past week and a half, we've been talking heavily about the trend in which the SPY is formed on. You're coming to the top of that level. And then when we look at the Nasdaq, you've actually already broken above that level as well. Today, we need to do a deep dive into what is happening on the market. Are we going to continue to push down, or are we going to actually break through this level on the SP 500 and break back through on the Nasdaq? Because as you come here into NQ and really look here, you are in fact getting that breakout, but now you're starting to get that retest back towards that downside type level we're talking about. So you see are coming right back down there. Now I'm going to break this down and go into what factors you need to be looking over the long term, about the next week to next 2 months, give or take. And we'll find out if this is a dead cat bounce during a bear rally, or if we're going to continue getting some more love going on. Now, before we get into that, to ask you to consider doing two things: liking and subscribing. Every single day I'm giving you the videos regarding the market and things you need to know and what you need to be watching. Okay, so as we get in here, we're going to talk a little bit about this. Now, what we've been watching for a lot, this is the S&P Futures ES, and so you're definitely in a quote-unquote wedge, and you're seeing this all over basically social media. Anywhere you're around people trading stocks, they're probably showing you this. This is the ES, and this is the Nasdaq Futures. Very similar patterns going on here. Now, where this goes back to is definitely back to this key range we have mentioned right here. I'm just going to move this up really quick as well so you can see. So this is our key target. This is what we were targeting for the past two and a half months, roughly. You came up and you actually hit 13.7. Then you kind of got rejected, and we're sitting here now. Now, you're also seeing a lot of these patterns being thrown out there that you're seeing a quote-unquote, a head and shoulders forming here, and you're breaking down, whatever it may be. I'm just going to go over the fundamentals and what's happening right now and what you need to be watching for. A lot of my content is revolved around day trading and things like that. However, right now, you get into key areas that are very influential in what's happening on the market. So I'm going to go over what's influential and the big factors, because before I go any further, I want to give a special shout out to Hanka Trade. This is who I am currently using when I'm trading futures in the after hours or anything like that. You already know where I do my Bitcoin trading, and now this is where I do my future trading using Bitcoin as well. You can trade the NAS and the SPX basically 24/5 using their platform. And when you're looking at account types to be using, the one I'm using is going to be the ECN Plus. I'll explain why, because I'm going to be doing $1,000 challenge here on the channel, as well as most likely the new channel as well. So you can follow me along using the platform, learn how to use it as well if you're interested in using anything like this. And a key reason that I'm using Hanka Trade specifically is because, one, they're going to use my base currency. Two, if I ever want to do something like Forex as well, when it pairs well with something the way that the economy is moving, I can also use them for that. But it's also going to be very minimal when it comes down to these commissions, which can rack up. They're also going to give you the capability to go to max leverage. Now, I'm never going up to 500, but I am leveraging my money specifically on futures. And when it comes to trading any type of Forex or anything like that, based on what I'm trading and how my style performs. And just so you know, they are also running a bonus, giving you a 100% deposit bonus on whatever you're using. You can always withdraw your initial deposit, but you need to look at the actual rules for depositing the 100% bonus when you are trading it, because there are certain rules that apply as well. But they have a lot of promotions going on, so I would definitely be checking them out right now, because this is how you can trade some of the futures that I'm talking about here in the video. If you want to really start timing these moves that you've had, when you're really seeing bears step in and take control, correct? So if we go back and you really start seeing some of these really bearish moves that we've had that have kind of started this trend, right? It's all been based off of news. When we really get down to it, it's been based off of fundamental news that comes out, and that's going to kind of hurt the market for the next weeks, 2 months, right? Whether it be raising rates, inflation going up, CPI, growth being drawn down, GDP being more negative revision, things like that. And as of lately, basically, I would say since essentially the mid-June, you've had no real negative news on the market. You've had the occasional drawdown, but ultimately you've been bouncing back. So I've been really clear here, and we've been saying this a lot on the channel. And again, it's probably going to hurt your ears to hear it again, that bulls take the stairs, bears take the elevator. And when you see here, you're seeing sellers take control. This is continuously, when we were bearish, you were seeing sellers take control over and over and over. But on these moves to the upside, you've seen it just be back and forth. And this is really the only time I could see that bears really stepped in was right here. That's when we started seeing some bearish pressure there. But still, you never made a new low there. But each time from this, you kind of chop to the downside, you chop to the downside, you kind of chopped a little bit here, you chopped a little bit here, and then eventually you pop back up. Now, as we look at all this, I want to be very clear into what's happening now. Am I saying you're chopping here? I've drawn this out in the past few days and said you kind of have the same pattern to where you're chopping around and you haven't really got secured to the thesis of pushing it to the downside. And I believe that a lot of this comes from when we look at something like Bookmap here. So I'm going to show you Bookmap. And as you look here, you can see the overall flow here. And as we see, we're moving up, but what I want to focus you in on before we go any further, first I'll show you the quote unquote dark pool and kind of hidden orders coming in that aren't on your level 2. Is you're seeing, they're mixed here. Yesterday you saw a lot of buying, and then you're seeing some mixed back again, and then here at the end of the day, you're seeing more buying. And we're going to go over some of that flow here and again in a second as far as options. But I actually want to take that off so you can see more clearly just the CVD. And so if you don't use the CVD, I recommend using it just as far as showing you the overall momentum in the market and who's stepping in. So typically when this is going on and we're getting clear trends on the market, CVDs either just straight red to where it says bleeding and we're just making new lows all day, or it's just green where you're making new highs all day. Now, you come into these periods of chop, right? So I'm going to highlight again. So you're right now, I wouldn't say necessarily this is even as choppy as we've seen in the past. I definitely think we've seen more chop. However, what I will say is that you're definitely not really trending clear here. So when I'm looking at this, it gives me kind of a clear conscious of seeing what's happening. So when you've had some of these moves to the downside, you're usually getting some of that chop around. But right here was a great example with that CVD. Is you'll see the CVD pop up and down, and it really just gets you to these areas where you're trying to make a decision. Now, right now, what I will say is each time you've been pushing up on Nasdaq and S&P futures, you come to these levels, you retest previous highs, and typically buyers step back in, and then you press back up, right? We've talked about this a lot here on the channel as well. But right now, you've actually broken some previous highs finally, and you're pushing down still. You've seen buyers try to step back in, which we can see here on Bookmap. You'll see you'll come down, you'll try to push you back up, you'll come down, just up and down, kind of just trending to the downside right now. However, I will say that the move right now isn't to the point that we've seen in the past where it's just sellers taking control. For instance, when we're pushing up here, we'll come to a resistance, we'll chop around, and then bulls would just take control. Sellers wouldn't really respect that level, and they wouldn't step back in. So, for instance, what we look for here, and when you're looking at supply and demand or whatever you're using to trade, is you're coming to a level, and then typically when you hit that level, your target, quote unquote, your target, you're looking for sellers to step back in because that's where your target is, right? And so when sellers step in, typically they start to push you down. And this is kind of the thesis of our trading method here, right? It's a reactive type trading. So when we break through, we want to get a retest. And what do we do at that retest? We buy because that's where buyers are going to step back in. And so what's happening here is you're seeing a mix of both happening right now. So we've hit our ultimate target and sellers are stepping back in, but you're not seeing a lot of volume. So if we go over, and I'm just going to use really quick of Yahoo Finance as an example to just show you this. So if you don't know, use Yahoo Finance. It'll give you a really quick rundown of the volume on certain things. And I'm just going to look at SPY, just for the easiest way to look at this right now. And looking at SPY, and I can already tell you the historical average is around 60 million. Now, right now, you actually ended the day above that. But on the previous days, I would say almost the entire week, the 30-day average, I think it's around 63 million right now. And so every day except you can say Wednesday was a decent day, but Wednesday wasn't a very important day. You had some decent news coming out there with the Fed minutes. But prior to that, you had less volume here as well, and then less volume on Thursday as well. So slower, lower volume. And I would also argue that this volume kicking in here is from options expiring. So the fact that this is a monthly expiration and your volume isn't higher should tell you something as well. So you're seeing minimal volume. So what does that mean? I always say this as well, is you don't need major volume to push you down, right? You don't need major volume to push you down. You just need more sellers and buyers and more buyers and sellers. That's all you need. You don't need crazy volume. You didn't have crazy volume to the upside. haven't had really crazy volume to the downside. So as we're looking at this and I'm coming in here, I'm waiting for news, right? I'm waiting for news that's going to shift the demand on the market and shift the way we're viewing it. And that news is coming up. So as we're looking, investing.com, it's the easiest way to track this. If you don't know, I really recommend using them. It's just extremely simple. They have a calendar for you. Usually the week of is the best to look at. Sometimes they don't update their calendar, multiple weeks in advance as far as the Fed goes. So looking for next week, what is happening? Now I want to highlight a few things. I said it was Wednesday. It's actually going to be Thursday. Thursday is your GDP. So Thursday is your GDP revision. Highly anticipated. We continue to have the ATL Fed pushing that growth should start perking up a little bit, and that we're going to stop having these negative quote unquote GDP revisions. Okay, so GDP, very important. Now I'm going to come all the way down to Friday, and if you don't know, and I was not aware until I saw this morning, you have Jackson Hole. You're going to have Powell talking about this as well, and then you have PCE. So you're going to have a great influx of information happening in this day. So to wake up on this Friday coming up, you're going to have PCE data coming out. That in alone is going to be important. This is the one that the Fed continues to say is the most important. It's more important than CPI. It's more relative. And then you have Jackson Hole, where Powell will be speaking primarily the entire time. Those two factors are going to be very big. So you have GDP, PCE, and then Jackson Hole. PCE and Jackson Hole on the same day. And the main thing from Jackson Hole to know is that who's going to be speaking? Jerome Powell. He's going to influence the market the most. As we look at that, I say going into that, we're going to have choppier movement. That's why I said going in on Wednesday. When we come back to this Wednesday right here, I believe that a short-term top is in place. I think this is our short-term top, 13.75. I think it's just there right now. In order for us to break above this level, you're going to need great news. Okay. So what does that mean? You're going to need one, GDP is going to have to come out strong, which I could not tell you how it's going to come out. Two, you're going to need Jackson Hole to go very well. And I don't think Powell is going to be in a position to say inflation's peaked. And I think his concern is going to be around the housing market and what's happening there. And then I'm curious what he says regarding what's happening in Europe right now. Now, we talked about this as well, but if you have not watched this video, I recommend it. This one right here, I'm going to pin it to my YouTube page, so it'll be the #1 showing when you come to my channel. But when you look at this video, I recommend taking the time and listening to it. It's going to be a longer video. It's 22 minutes. It's longer. You can skip through it if you need to. But it's going into oil and what's happening here, because we're going to see this crisis on oil start to pick back up. There is an energy crisis globally. Now, when we look here, U.S. oil, what's happening here? Again, I've been monitoring this for some time. You're in a descending wedge here on U.S. oil. The barrel, you're coming down to where your previous 2021 highs right here, and you're mounting that level. What's happening with oil stocks? You have Exxon. It's already been bouncing without the barrel. It's already been moving strong. Oxy, brand new news today. If you didn't miss that video as well, since then you've been going crazy on Oxy. But what happened? Warren Buffett announced that he's looking, and he got approved to buy up to 50% of Oxy as a company. And I think his stake right now is around 20 to 30%. So that's significant more buying stepping in there. So as you start to look at this, this becomes interesting. I started a position in USO today as well. This follows the barrel almost to a T, and you're holding that key level. This is going to be a swing for myself. I'm going to be averaging in as we go. But I definitely not financial advice. Do your own DD there, but that's what I'm doing right now. So looking at this is you're seeing the market act as, I would say, inverse to oil. And what's happened? Basically, since oil bottomed or topped off, the market bottomed off. So you're seeing inflation have this straight correlation of inflation is dropping because of oil prices, but nothing else is dropping in prices, right? So oil is dropping rapidly and has been over the past 2 months. But if you look at what's happened to the market, you're just following that inverse, right? So this is the Nasdaq. And if you go to US oil, the barrel, it's doing it's the same chart, just invert, just upside down. So again, going back, you can see what's happening here. Boom. That's, the same exact chart. I don't know what to show you here. So as we look at this, what am I looking for? What am I waiting for? You've been breaking down. You actually broke in finally above some previous highs that we had marked out here. this is interesting. You're starting to get to some of these key levels, and sellers are definitely, over the past few days, stepping in more than bears or than bulls. So what am I looking for going into Thursday, going into Wednesday? I'm looking, one, for a retest of 13,000 here on Nasdaq. I think we will get that before most likely Thursday, Wednesday. I think this level will be tested, pushing back down to locally here, maybe a little bit lower to 13,000. So this is my two levels I'm watching, like 13.1, then down to around 13,000 flat. These two levels, that's what I'm watching, right? From there, I would imagine you don't get a direct breakdown of this 13,000 level without GDP and without Jackson Hole. Now, you need to understand those 2 days are going to be huge. So I don't think you're just going to get a direct move from GDP. I think you'll get some type of move, but then going into Wednesday, going into Friday is going to be the most important day with that Jackson Hole news and with how Powell expresses his feeling towards this market. But what we need to understand as well is that we're still in the time of midterms going on with the Democratic Party. Now, the Dems, in my opinion, are already screwed when it comes to being reelected in certain districts. However, they need the economy to stay afloat if they even want to win back some of these, they should have been easier win districts, and they're still going to struggle with those. This is very big for the Democratic Party and what they're going to do in 2024. They need to do as good as possible here if they want to have a chance going into 2024. Now, leading to the market again. So that has me with a fundamentally viewpoint of the market being strong. I'm just going to say that right now. Going through basically September, I look at the market and I'm saying, I don't know how they're going to let this slip, because if they let this slip, the Democrats are screwed. But as we look at some of these fundamental viewpoints, such as junk bonds, you continue to drop. And you're breaking through very large levels that we continue to mention here. If you're not watching every day, then you're kind of doing yourself a disservice. But you're seeing you're breaking through all these key levels on junk bonds. That's a major concern. DXY. The dollar is pumping like crazy. We've marked out our key levels on here, which we made in those previous videos. You're bouncing, and now you're shooting back up, ready to break new highs. The euro is almost below now. It is almost below the dollar. You're literally less than half a penny away from being below the dollar. Remember yesterday, you were almost 2 pennies. Guess what? You're inching closer and closer and closer. So you've made a substantial drop here as well. This is going to lead into the overall crisis going on in Europe. And if you are struggling to realize how Europe is going to affect us, just take a step back and say, how did Russia and Ukraine affect us? Okay. What was the number one thing that affected us from Russia and Ukraine? It was gas. Gas is the number one way that we were affected. UNG, natural gas, is in a clear cup and handle, ready to fly. Again, that's not the big thing that's going to hurt us here. What's going to hurt us is going to be oil, and oil looks ready to erupt once again. Now, again, I'm not telling you to buy this. I'm not telling you to do any of that. I'm telling you to watch this, because these areas are going to be crucial going into next week and going into the next few months. So as of right now, I'm not telling you or giving you day trading updates. I'm giving you broad market updates, because these are the factors you need to be watching in the futures you got to be paying attention to. When we come to these levels, we had clear targets on our bull run this whole time on the channel. What was I saying? We come back here. Look at these videos. Massive move, shorts squeezing out, bear trap. Everyone here, when I was saying bears were getting trapped, people were like, Tyler, you're crazy, you're losing your mind. We were telling everyone, moves upside, 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 upside. That's all we were saying, right? Well, we hit our targets, people. We hit those key levels. Now, could we break above them? It's possible, but I don't see that happening before Friday or next Friday coming into Jackson Hole. You're going to need big news to push you above these levels. That's my personal opinion, and that's what I'm looking at right now. Now, as we get in here, I'm going to look at SPX, SPY, QQQ, and VIX. So looking here, I go to the biggest orders, and the biggest orders here, SPX was the one with the biggest question marks for me, and I have to assume this is a hedge. I'll go into exactly why, but these are not sweeps. So these are splits. So these typically come out more of hedges. That's where I have to assume these are, but I'll explain exactly why here in a sec as well. We've been seeing large orders on SPY coming in for the downside, and today it was almost all downside when it comes to puts. You're seeing those step in, and there's sweeps here as well. One was a block, but most of them are sweeps, which are very aggressive short sellers coming in here. Going into Qs, similar action. Your big orders were all towards the downside, and your biggest, the 5 million, was a sweep for October. That's another growing trend we're seeing here. A lot of these sweeps that are aggressive are going into October's chain. The last one is going to be VIX, which I want to talk about here as well. A lot of calls are expecting VIX to go up. Now, we've been talking about VIX, and if you've been here on the channel, the biggest thing here is we've been showing you, and we've been really prepared for the massive sell-offs. And as of right now, I have a few positions, but really the only position I have is that oil position. But if we're looking here, and you're looking at what's happening, VIX has been one of the best indicators of getting some of these massive moves. And previously, it was at $24 level. But now you're coming back down to the 18 to 16. And I keep saying it, I want to see that $18 level. That's where I want to start buying my puts on the market. And you're seeing that level, but you're trying to break out of this channel right now. But you're still clearly in that downward channel you've been since basically June. You're pushing down. This is the one thing that's showing me people, one, are betting calls. They're betting on VIX to go up heavily. They're prepared for that upside. But you need to be paying close attention to this as well. Because if we go back to SPY and we look at what's really happened, we look at NQ because it's quicker. You've been having news surrounding. Again, I want to highlight that before I let you go, is that you've had very critical news before you start dumping, right? You don't just drop based on technicals, which I'm not saying technicals don't matter. I use technicals here all day. But you haven't been just dumping on the market without critical news, saying CPI is going to continue to grow, inflation's continuing to grow, we need to raise rates, we're not going to cut rates, this, that. Ukraine's being invaded. It's all been news related. Same with VIX. So people are prepared, but we haven't seen that move yet. So what I'm doing is I am waiting patiently for that news to come out. Because if you've been here, then we've been prepared here on the channel for the downside here, for the downside here, for the downside here, for the downside here. We were prepared the entire time. We've been talking about it over the past few months. Every day we're keeping you up to date. So we're not going to miss it. There's no reason. Now we might miss the initial tip of it, but we're not going to miss the move based on the fundamentals. We're going to be prepared. So what do I say to that? I want to watch VIX closely to see if it's ever going to break out of this and if it's going to come to $18. Big thing right there. Number two, you need to be prepared. You need to be watching the news coming out of Jackson Hole and GDP. Those are going to be the big market movers, and that's going to set the tone for the coming weeks going into your next interest rate decision and next interest rate hike. So those are things you need to be watching closely. I'll see you next time.